Okay, well, yeah. So if you look at the Brent crude WTI, it's around $100 right now, and meanwhile, the Asian markets, cash settled crude prices are more like 170. So one indicator, the cash Dubai crude is refers to physical oil pricing. It's a physical oil pricing benchmark used in global energy markets, specifically for Middle Eastern crude sold to Asia at $170 right now. So people in Asia are paying that much for crude oil. This is the highest ever price seen.
Yeah, I write about this in the newsletter as well, which is there's an interesting thing that happened. Um, the Asian refiners, they were biding their time until about, I guess, Wednesday or Thursday of last week when they started um, running out of oil to refine. They hadn't fully run out, but they were starting to run out, and so they started sourcing barrels outside of the Middle East. Right now, again, a lot of these Asian countries, not all of them, but like Japan and China, they have a lot of money, and so they can go out on into the world markets and start bidding up oil other places, right? And then and that's why you saw that happen. And again, it'll trickle out everywhere because they
Right.
can go out and buy oil by just paying more money.
But some places can't. And I saw that Laos, for example, just said that they've issued, they've said all schools are now to be only 3 days a week.
Yep.
This is because of their inability to source oil. They don't have the purchasing power that the bigger economies do. So some economies already putting restrictions on oil consumption, basically.
Definitely. Um, I again, I this is the newsletter. I talked about how two major airlines have each canceled 1,000+ flights for April, and these are all the flights that were canceled were all the flights that had a leg in Asia. And the reason that the flights were canceled is because the airlines were not confident that those Asian countries could refuel their jets, their airplanes, and so their airplanes would be stuck there. And so they for the month of April alone, already two airlines have canceled 1,000+ flights each. Um, I have to imagine this will spread everywhere, even major countries like Japan and China. They're just going to start having to reduce it from a pragmatic level. And just for everybody listening, jet fuel is kind of the most, not kind of, it is the most expensive large volume product from crude oil. It's considered the highest level of, I guess you would say, like burnable fuel, and so it is the reason that it's so expensive is that it's harder to produce and there's less of it produced. So obviously it'll have a faster impact on scarcity, right? Because it's already there's not a lot of it already. So you could imagine like airlines being kind of a canary in the coal mine in terms of things that are going to start being canceled or reduced first.
Yep. All right. Let's talk about treasuries for a moment, because this is another major component of this, I believe. 10-year bond prices have been spiking since the start of the outbreak of conflict, up from just under 4% at the start of the conflict to now nearly 4.4%. So I think a 45 basis point increase in the 10-year Treasury bond yield. Some people are saying that this could be more important, at least for the U.S.'s strategic involvement in this conflict than the price of oil from the U.S.'s perspective, because it has such a high debt. When these yields go up, that increases the debt servicing cost, and that is the real threat for the U.S., the thing that might, I don't know, dictate how they react in the coming days.
Yeah, I mean, I think there's two camps on this. In the crypto dollar debasement, I hate America fiat world, the people look at this and they point to it and they say, see, world, the fiat system, the U.S. Debt thing it's blowing up. A lot of the people that I follow, though, like Bob Elliott, who I think maybe I mentioned earlier, they're like, no, this is completely normal, right? Like, what usually happens in these kinds of things is bond yields will spike, and then at a certain point, the yields are attractive enough where they become people start buying the heck out of them. And so
yeah, especially as other markets sell off, right? People are looking for a safe haven, and okay, the dollar is strengthening, and it offers higher yield. So naturally, that's where you would put it. And so you're saying that would counteract the yield.
Yeah, and they say yield. Yeah. So like, and again, these are like, I think, really intelligent people. You have like Bob Elliott there, Brent Johnson, Dollar Milkshake guy, he says it, but also Michael Green, right, of Simplify. The again, all really, really smart people, and I think their basic idea though is to counter a lot of these doomer things is like the U.S. having higher yields on their bonds. As the yield goes up, it then becomes attractive, and it will be bought like en masse, right? And so a lot of these folks are waiting for that, right? That's what they're waiting for. And I think Bob Elliott said in a podcast last week, he was like, yeah, once the 10-year, I think it was the 10-year, once the 10-year gets to about 5%, that's kind of where I think it could go. I think that's when we'll start kind of piling into bonds. So again, it's kind of it's not a bug. It's a feature. It's not a problem. It's kind of what it should happen in a way. But again, I'm not exactly sure. I'm just repeating what others have said on that.
Okay. So Bitcoin down from a high of almost 75,000 about a week ago, down to now below 68, just below 68,000. Reacting over the weekend, more like risk off, or tech beta, I guess is the way it's reacting right now. Gold and silver have had historic sell-offs over the last week, especially the last few days. Gold briefly spiked to $4,500 at the outbreak of conflict. Sorry, $5,500 at the outbreak of conflict. Now down to below or around 4,500. So that's almost 4,400 now. So we're talking 20% drop from the most recent peak.
It's like what I saw a post. Was that like $1.5 trillion or something like that?
I think it's quite a bit more than that, because the gold market cap is like 30 or 40 trillion, and so we're talking like 10 trillion or something.
So it's like what, 5 times the crypto or
the entire crypto market cap.
Nice.
So historic moves happening in gold and silver. Silver obviously kind of acting like beta to gold, selling off even more, down to I think $60 or just above $60, somewhere between 60 and 70. So
and I'd like to point out this Citrini post. So shout out to Citrini. He didn't nail it exactly, but again, it was a great post. And I think I'll always remember this aphorism because it kind of perfectly encapsulates something that you and I have said on podcasts ever since COVID, when I saw this in COVID, right? Which is, where is the post? Oh, here it is.
Quote, when people are worried about the future, they buy gold. When people are worried about the present, they sell gold.
Boom. Perfect. I mean, that is exactly, it's so good to hear someone say what I've been bumbling saying for years. It's like, this is it. This is exactly it captures it. And we saw it in COVID, right? You saw it during that crazy COVID shock. Was that March 11th? And we're kind of seeing it now, I think. And I
think, Bitcoin probably follows a very similar pattern to that as well.
Yeah.